What's up, everybody? Welcome to the Stocks channel. Today we had the PPI data and the bulls were able to hold above support. Are the bulls about to start stampeding? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today's SPY was down 0.2%, but intraday there was the opportunity for the bears to take over, and that was going to require the break and close of that support at 514. Now, the reason I think the bulls could start stampeding from here is because the bulls did hold above critical support. SPY did close above all the moving averages within the bull trend, and we did get another brand new all-time high in a market moving name through Microsoft. So again, we're unbiased price action traders, and we can't ignore the fact that Microsoft just broke out to a new all-time high and the indices held support, and they're still in bull trends after the CPI data and the PPI data. Now, does that guarantee they'll stay in bull trends? Well, obviously we need to be flexible, and if price does come down and reject and break through support, then we immediately need to get risk off. But going into tomorrow and going into next week, it looks like the bulls are well positioned to continue to push higher. And because of that, I did add a new price target up here on SPY because there's a good chance if we push to 520 and break through it, we will trigger another short squeeze and we will likely go to 525. So this is a very simple trade plan, and I always like to keep it simple because we just follow price. If we are above 514, there's a good chance we're going to 520 and then 525. If we break down below 514 and we start to close below 514, then we are likely coming down here towards this critical support at 507, and below 507 we go to 497. Again, bullish until we break support, which means we need to break support to get bearish. We are going to default to bullish due to the bull trend and the price action above all the moving averages. It is really that simple. Do not overcomplicate it. People have been overcomplicating this bull trend all year long and even going into last year. And if you keep it simple, you will really understand it is simple. It is you overcomplicating it, and it is your human emotions overcomplicating it. If you're strictly following a system or simple price action and you're unbiased and you try to keep the emotions in check, this has been a very simple market to trade. So bullish above 514, I don't think it gets any easier than that, and then get risk off if we break below it. On the NASDAQ 100 triple Qs, we were down 0.25% today, but just like SPY, we did have a breakout to a new all-time high in Microsoft, and we did hold that critical support test at 437. So above 437, there's a good chance we're going up there to 453, and if we break below 437, just get risk off. And it's very low risk to be long here because we're right here at the risk level. And if we break down below that support, which is the risk level, then we're likely coming down towards the gap fill at 425. So it is a good chance we're going higher. The bulls held support and we saw the price action breakout in market moving names. So when you see that, you cannot ignore it. And right now, I think you have to give all of the benefit of the doubt to the bulls. The next bull breakout will be this higher high breakout above 443, and that should tell us we no longer have the lower high, and then the bulls take over from there. On the Dow Jones, we were down 0.29% today, and this is starting to look like a breakout and a retest of the breakout before we continue higher, and the continuation higher in the Dow would bring us to 400, and you should be expecting that as long as we can hold this breakout and above the rising 20 daily moving average at 389. Above 389, stay bullish, and if we break below it, you can get risk off, and then we'll likely come back down towards support at 385. On the Russell 2000 IWM ETF, we were down 1.79% today, and we finally closed that pesky open gap, which was right there below 202, and from there, you can clearly tell from the arrow, I think we could bounce higher to 214. So again, as long as the bulls can hold above 200, or you can call it 199, you should be staying bullish in the small caps because it's low risk to do so. If we break below that support, you can get risk off, but while we're above it, you need to be bullish. Or you can wait for the next bull breakout above 205 and 207. Above those, we go to the next price target higher at 214. On the ARKK ETF, we were down 3.22% today, and this is largely due to Coinbase and Tesla, which are two of the top holdings in this ETF. And that's why I told you this is not an ETF you really want to invest in. There are some horrible stocks in this ETF, but you can trade it if you'd like to. I mostly follow it to see what the bad stocks are doing. And right now, we can see the bad stocks are really just going much of nowhere. Now, I'm not calling Tesla a bad stock, but there are a lot of bad stocks in this ETF, and you do want to get risk off if we break the support at 48 and 47, because that will look like a double top rejection going back down to 44. On the VIX, we were up 4.73% today, and tomorrow is quad witching, which is typically a volatile day as money moves around and rebalances for the quarter and the next 3 months looking forward, because there will be a lot of contracts expiring, and that could lead to more volatility. And I did warn you last night that we are making higher lows in the VIX, which could lead to high volume panic selling. Now, right now, you can see the VIX did crush from 15, and we did see a lot of bullish indications today. So it is possible we do see the VIX continue lower towards 13 before we see a spike in fear yet again. On Bitcoin, we're currently down about 3.5%, and Bitcoin got very close to that price target up there, right around 74,700, and we are starting to get some high volume selling, which could mean we've seen the top, and this could be the end of a blow off top in Bitcoin before a major correction. Now you can stay bullish above 67,000, but that's my line in the sand. If we break below 67,000, I think you need to get out and get risk off because we could be going a lot lower. We still haven't quite hit that price target, so we could go a bit higher and hit that price target before we really start to see the high volume selling. On Nvidia stock, we were down 3.24% today, and we did close back down below a 5 EMA, which is now a negative slope, and we couldn't hold that level at 888. And it is possible that Nvidia is just going to build out a giant bull flag here and just go much of nowhere for a while before it can consolidate this bull run and go any higher. So do not rule out the possibility that Nvidia just stays in this range. And if it doesn't stay in the range, the most likely possibility is we put in a lower high before we come down here and fill this gap at 823. So 823 would probably be the bottom of this range, and then the top of the range would be this high right around 933. So watch that as a possibility. I don't really like going long here in Nvidia because I do think it could be going a lot lower, and a lot lower simply means we would go down to that gap fill, which as you can tell is still a 7% drop. So I'm not extremely bullish in the semiconductors at this point. I think they went a little too far too fast, and they're due for some consolidating and cooling down before they can go any higher. On Tesla, we had a lot of excitement today because we went all the way down to the price target, which is the bottom of this channel, which is right there, right around 160. And this is where I think Tesla could find a bottom. And yes, we could go a bit lower, but from there, I would expect Tesla to go on a very nice bull rally back higher towards the 180s. So if I'm updating this arrow, I think yes, we possibly could go a bit lower, but that would likely be a buying opportunity before another bull rally. So yes, it's definitely catching a falling knife. So if you're going to buy down here, make sure you're in it for the long haul or manage your risk around one of these support levels, which I have around 160 and 154. Below that, we would likely go towards 146. So it's up to you if you're a long-term Tesla bull or you want to wait for confirmation. The bottom is in and we start to reverse. But if you want a low risk entry, it's going to be down here right around 160. On Apple stock, we were up over 1% today, and Apple is closing back above the 5 EMA for multiple days in a row, so it's possible this was a bottom in Apple, and we've already seen the bottom, but the confirmation of that really needs to be the break and close above 174, which we could see as soon as tomorrow, and then above that, we would likely go towards 177 to 180. I am bullish in Apple in the longer term, and I think if you're okay with buying Apple low, this is definitely the time to be doing it, even though I wouldn't rule out the possibility it can still go to 167 and then start a bull rally, but I would only buy more at 167, so I'm not worried about that, but obviously you need to make your own trade plan and you need to manage your own risk tolerance. I do believe this is a great time to consider loading up for the longer haul, which would be a longer term swing trade, because I do think at one point we're coming all the way back up into the 180s. So jumping back over to the S&P 500, today was a very bullish day, all things considered. The bulls did everything they needed to do and they passed every test that they had to pass. So it's really back in the bulls camp to start pushing this market higher. And it's only if the bulls start to fumble the ball that the bears are going to get the confidence to try to send this market lower. If you're still bearish, I think you need to stay on the sidelines because we don't have any technical evidence that it's time to short this market. It is still a very strong bull trend, and the bulls just continue to show you how strong they are. You don't want to get in the way of a bullish freight train, and I am definitely not shorting a bullish freight train. There are opportunities to short this market at highs or at some stocks that are in bear trends, and we are taking advantage of those opportunities in the Discord server, but largely if you're following the indices, I think you need to stay bullish here. So that's what we're going to continue to do. I still think this is a stock pickers market, and we're still crushing this market in both directions on the Discord server. We made a very solid short trade on Coinbase today, and we're also doing great on long trades like Apple. So it is a stock pickers market for both bears and bulls alike. If you want to come trade with us and learn how to trade price action, you need to join the Stocks Channel Discord server, and you'll also get access to all of my intraday updates and technical analysis. You can find out how to join the Stocks Channel Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.